Welcome to Forex Trading Course Part 2. First off, I wanted to introduce you to the next section that we were going to go over. It has to do with a lot of rules and setups, and I think that's one of the facts of trading that many investors fail to recognize, that you need to follow a systematic approach to the market. What prohibits us from approaching the market systematically is, for most investors, they just fail to apply all the lessons learned from past mistakes. And I think that if you ask yourself, if you've traded before, what has gone wrong and what is going to make things different? If you follow a set of rules exactly, you should see success. And that is why we talk about things such as place stops, let winners ride, cut losses early. But why do people fail to follow those simple rules? Well, the answer stems from the same elusive reason why we all as human beings have broken New Year's Eve resolutions, and we've had that extra helping when we know we really shouldn't have, when we're on a diet, and we've never really gotten around to fixing something that was broken that we've had on a wish list to do. It's called human nature. Remember, in the first section we talked about human nature, and that's how we get the reoccurring patterns, because human nature never really changes. And in my experience, I've invariably found that the greatest obstacle one has in successful trading, the biggest obstacle itself, is one itself. And so there's a variety of demons that reside within each of us, and it's forcing us to keep what we call losing trades too long, or possibly we get out of profits too early. Or maybe we're looking for advice from everyone that comes around the pike, and we just fail to follow our own system. What you have in front of you, in each and every one of us, all have equal access to the same four elements. Those elements are the open, the high, the low, and the close. It's what we do with that information, how our minds process it, how we act on that information. That's what makes us different as traders. And in the Forex market, it's very simple. There's a value placed on a given currency, and the market's going to move in a specific time frame, and there will be a specific move. If we understand that, and if we act on a trading signal when the trading signal is triggered, then we have a better chance of success. And if we follow that formula each and every day, then you're going to see your account build in equity. And that's really what the secret of trading is. I'm not going to teach you to abandon everything that you've learned, or some of the patterns or technical analysis techniques that you've learned and have applied in the past, because many of them still apply even with my methodology. We will find in this section there's patterns within patterns. Do you remember earlier we talked in the first CD about a potential rounding bottom, and it sometimes turns into what was called a cup and handle? Well, we'll show you another great example of how that happens. A lot of patterns do occur within the foreign currency markets, within the certain patterns that are more of my style, and my style of price patterns is looking at the relationship between the open, the high, the low, and the close. So let's get started with the second session here. First off, we're going to talk about trading using candlestick charting. Now, most of you may have already been familiar or introduced to candlesticks. I don't look at candlestick patterns as or use them as most traders do. In fact, I rarely use most of the patterns and trade off most of the patterns that I even wrote about in my first book, The Complete Guide to Technical Trading Tactics. And that was the book that was endorsed by a lot of great famous technicians. What I use candlestick patterns for is basically to help me uncover the momentum of the market, either increasing or decreasing, or looking at volume or trading activity drying up or expanding. What that means is this. If we look at our chart to our left, we will see it is a white or hollow candle. Instantly, I can tell the difference between the high and the low in this candle. I can see the difference of what we call the shadows. And in this case, a white or hollow, and in colored charts, this would be a green candle, because the market's signifying that it's closing above the open, as you see here. Now, the shadows is the difference between, if the market closes above the open, the shadow is between the low and the open, and the upper shadow would be the difference between the close and the high. So we can look at several factors: the overall length of the market, the overall length of that given trading range. We can also look at the overall range of the real body, and we can see separation between where the market closes and the actual high. That's very important, by the way, because in a true bullish market condition, we want to see the market do what? We want to see it close closer to the high, don't we?